Hello everyone and welcome to Jeff Fitzpatrick's Share Show. It's the 28th of June 2021. This week I have the usual update on the market and trading accounts and a trading lesson. Also news of the Stocks and Options Club, which was to be the Share Club. So first, the markets. This is the Nasdaq, ticker symbol COMPQX. And you can see it's still in an upward trend. It's possibly going to challenge the upper lane of traffic and get back into that, but we don't know yet. However, it could fall by up to 2.5%, 360 points, but still remain in that upward trend. So remember, stocks never go in a straight line. And here is the S&P 500, still in an upward trend. However, the last week or two has seen a bit of a flattening of the curve, with higher highs and lower lows. So things might be slowing down a little there. And next, club performance. First teas, not our best month, but still shooting at 5%. The value of the club at the end of May was $56,986. We're up $3,247 since then, which is 4.64%. So we're certainly not giving up on 5% just yet. And Diamond, again, not our best month, but we still have a little time remaining. And now we have actual stock holdings in 9 companies on which we're selling calls as and when the opportunities arise. Calls bring in a lower gain than puts. However, we've got 47,000 of stock buying power, so we'll be increasing our put sales again. Fortune, and like the other 2 clubs, not the best ever. However, we have acquired 3 excellent stocks to sell calls against, and we've got about 20% of the value of our club sat in new money coming in this week from the existing members of Fortune and also from the new people that have come in from Pentland. And there are some brilliant opportunities in the market. And even having said all of that, we will end up this month at least 3% ahead. And of course, we continue to make life difficult for ourselves by putting in new money. The amount that we've quickly got to get to a high percentage is always higher. I'm not complaining, I'm explaining. And best stock picks. My best stock pick for this week, whether you're buying a stock or selling puts, is New Education and Technology. EDU is the ticker symbol. EDU closed last week at $8.12, so it's a low-cost stock. But it's forecast to get back up to, not for the first time, to $19. But we will need a little patience to get up there. So we've been selling the October $15 strike price put, which currently offers a premium of $7, and it's very light in the use of stock buying power. And this stock has also got a very nice, very low risk to reward ratio. And now a trading lesson. When to buy back a put that we've sold. When we buy back a put that we've sold, it's called a buy to close trade. And we frequently see that our puts are 95, even 99% in profit, with some period left to run on them. And it can feel as though the trade should be closed before the price of the stock starts to fall again. However, think again, especially if there's a lid trade that has been triggered. So what would you do in the example below? It's APOG. We've sold the $40 strike price put for August, and it's well up there, 86% in profit. And we have also got the lid has triggered, and that costs all of 20 cents compared to the $5.20 that we got per share in premium for selling the put. So I'm going to show you an extract of some training that Owen O'Malley did over this weekend that I think should answer this question for you. So here we go.
For SFL. So SFM. So go ahead. What's your question there?
Yes. So I have a 24 lid for September.
So you bought the 24. Yeah.
Lid. Yes.
Lid. Yeah.
And then I have a 25 short put for September.
Yeah.
Which is fluctuating between 77 to 80% profit. At one point it was 85.
Yeah.
I was wondering, since it seems to be in a downtrend, given that it's still September, if it's worth closing it, or given that it's a lid, I just wait.
So let's just get the math. It's always important to know. So when you sold the 25, what did you receive?
450,
450. And what did you pay for the lid?
50 cents.
50 cents. Perfect. So you paid, you took in, you started the position with a plus 450. You gave back 50 cents. Your net credit is 4. Your net risk is -1. So you're either going to walk away with $4 or $3. Either way, you're going to win. So it's a very clever trade. You're either going to walk away with $3 or $4. Looking at that chart, it does look like it has done 3 rolls up. It does look like it's going to want to revisit previous lows, which may not even get to. So what you could do, and probably the best time for your move was up here at the top of the third roll. However, I hear what you're saying. It is September, and you could potentially buy the close. So yeah, so how much would it cost you to buy the close, the 25?
I think around $400, so around $1 per, because I have 4 contracts, so $1.
Yeah, so you're going to have to now give back a second dollar. So when you look at the maths, you took in 450, you gave back 50 cents, and you're looking at proposing, you're just doing your analysis, should I give back another dollar to close it? Okay, so when you close it, if you did close it, your net credit now is going to be 3, isn't it?
Yes.
Which is no different to what you already have guaranteed here.
Yeah.
So when you look at it that respect, it doesn't release that much buying power, because if you've got 4 contracts and your net risk is 1, your net risk is only $400 now.
Yes.
And it's going to cost you $1 of hard cash to buy that back. And so by spending $1, it's going to cost you $400 to buy it back, but you're going to burn up $800 of buying power. Because for every $1 you give back, you deduct your buying power by 2. So you're going to go negative 400 of cash and then negative 800 of buying power. And all you're doing is releasing $400 of buying power. So you're going to spend $800 to release $400. That doesn't make sense.
So I leave it then.
Just leave it be, yeah. You're exactly the same. You're like delta neutral. Either way, you're going to make $3. So
yes. In case it gets up to again 30, I could then think of selling it, buying it back.
Well, ideally you would have done it at the top of the third row, because it probably wouldn't have cost $1. It would have made more sense. Now it doesn't make sense to buy back, because you're either going to make $3 or $3. So, but you've already guaranteed $3. So it makes perfect sense to leave it alone, because you're not gaining anything. You're just releasing $400 of risk. It's going to cost you $400 to release $400 of risk. It's actually going to cost you $800 in buying power.
So when it's at the top, because I have a similar one in NLOC, but NLOC is at 97% profit.
Mm-hmm.
So when it's there, that's okay to close it then.
If you think there's enough of time to get a second bite at the lid, because one of the reasons we close at the top is we say, wow, if this goes all the way back, let's say this did go down to 25 and you got plenty of time to go, you could use that lid again. The second time you use that lid, it's a free lid.
Yeah.
So it's more like if you think you've got an opportunity to use the lid twice, that's more the reason you close out. Because once you've locked it in, belt and braces, I'm either going to make $4 or $3, you just as well leave it alone, because it costs too much money too much money in terms of buying power.
Yes.
It doesn't make sense to release a small amount of buying power with double the amount of buying power. It costs you $800 to release $400 of buying power. So you haven't released anything. Yeah,
in this case, then it's good to keep it. And even NLOC is coming July, so third week July. And I have a 23 put.
Yeah, let's take a look at that and do the maths for everybody, because it's important that they use this as part of their decision-making process. So NLOC, Give us the figures there, yeah.
So the short put is at 23, and I got 220 for it.
You got 220 for selling the 23, yeah.
Yeah. And the lid is at 22.50, and I paid 25 cents.
Wow. So you paid 25 cents. So your net credit is 195. Your net risk is 50 cents now, isn't it?
Yeah.
So your net risk is you could lose 50 cents if it NLUC ends up. And look at this chart. It's going to take a big push to get that down below 22.50 with about, we're looking at maybe less than 30 days to go, isn't it?
Yes, yes.
So either which way, you're guaranteed 145. You've locked that in, and if it stays above 23, which it looks like it's going to do, you're going to walk away at 195. And this is a typical example where you don't have enough of time to use the lid a second time.
Yes. So we could keep this one too, because it's going to end up out of the money.
It's going to end up out of the money, and it's going to cost you too much money to release it, because how many contracts did you do in this one?
2.
2. So your risk is only $100. Your absolute risk is $100, and your buying power is only $50. So it's how much would it cost you to buy back a 23 now?
$10.
$10 of hard cash, which is going to, and then it's going to cost you $14.95. So it's going to cost you $20. It's going to cost you $25 to do it, and then times 2, because you're going to burn up $50 of buying power. So again, it's neutral. You're spending $50 to release $50, so there's no point.
Yes, yes. Yeah, $10 in total, for the whole contract.
Yeah, exactly. But because it's $10 of hard cash, plus the cost of the $14.95 to do it, it's actually 25 times 2 is 50. You're spending $50 of buying power to release $50 of buying power, so there's no point.
Okay, thank you.
You're very welcome. So that's a great question, because the only time you would consider it is if you had loads of time. If this was like a November or December position, you think, oh, I could maybe let it bounce, go back up again, I could use the lid for a second time. But in this case, you don't have enough of time to use that lid for a second time.
Mm-hmm. And so with SFM, we can wait as well to see what happens over the summer. Maybe it bounces back again.
Exactly.
So now you know, and here is the news. The Stocks and Options Club is now in place. It's free membership. It's mainly directed to people who are not quite ready to join one of our clubs or to start trading their own account. All club members can be enrolled in this automatically unless they opt out. Get along and register. It's www.stocksandoptions.co.uk. There are calculators there. There is also a scorecard, and there is research on a couple of stocks too. You're bound to find something of interest on the website. And keep the date. 21st of July is our first big webinar for introducing new people. And we will shortly be detailing a reward program that we aim to trial. This will say thank you for introducing new members, but no one should feel obliged to invite anyone unless they want to. We're not trying to be a network marketing company. And of course, the other big date is the 24th of September for our live event, which will take place in the Midlands of England. More details as soon as we have them. And that's it for this week. I hope you all have a great week. Let's do some trading, and away we go. Thanks again for listening. It's Jeff Fitzpatrick.